One. Hey, welcome to Coffee Connect, everybody. I'm Rodney. I'm your host here. We've got some great information to share from Joanne today. Listen, I would encourage you to, if you enjoy the conversation, this is your first time here, right? Shoot me an email at ccinfo@addictedtoconnecting.com. Love to add you to the group, right? Love to add you to the weekly email invites that come out, so you know when we're meeting, what the topic is, and whether it's applicable to you or not. As well, if you want to go back and check out some of the past episodes, we have been absolutely busy this whole year, really talking about networking and its value. And last week we had Tyler Jenkins on talking about top performance, and we've had some great topics. And today we're going to continue on with those great topics. But if you want to look at some of those past episodes, you can go to the website www.addictedtoconnecting.com. And it'll lead you to the YouTube channel where you can check out some of those playbacks, guys. So without any further ado, we're going to get this kicked off, right? Business wonders, right? About 2 months ago, man, I was sitting at our Thursday morning breakfast here in Cincinnati, just probably Clinton, myself, and Joanne, and maybe there might have been some other folks there, but I said, man, Joanne brings these topics up on a weekly basis, right? And I'm like, these are some good things that people need to understand and know. And I never want anybody to come here and give away their entire business, right, and what they do. But I thought this might be a great opportunity for her to, one, share with us some of the knowledge that she has regarding bookkeeping and what is involved in all of that, as well help us understand, right, better understand what Joanne can actually do, so that we can better refer her to some other folks. And so without any further ado, guys, we're going to turn this over to the amazing Joanne Ziakowski, and talking to us about business wonders and smart bookkeeping success. Let me stop that one and pull up. Are we seeing the PDF version of Smart Bookkeeping? Somebody?
Yes. I am.
There we go. So thank you for speaking up, somebody. So Joanne, it's all yours.
Okay, well, as Rodney mentioned, today I am going to be talking about some of the most common things that I come across when I'm working with clients, and quite a few of these also apply to individuals. So there may be some takeaways also if you're not directly a business owner. We'll go ahead to the next slide.
I'm getting there.
Okay, first I'm going to just do a overview of who I am and what I do. I am here located in Cincinnati, but I work with clients all around the country as well. And I have a background in accounting and finance. After my years in corporate, I also owned a medically focused retail store for 18 years. So I feel that brought me a lot of insights and wisdom from wearing all of the hats and going through all the pains of a small business owner. I'm going to go over the types of services that my firm offers. One is fractional CFO services. Fractional CFO services, or that's Chief Financial Officer. A lot of small businesses don't need to have somebody on staff all the time, 40 hours a week, 52 weeks a year. And they just want to bring in somebody, whether it's for a few hours a month or a few days a month, to help them really dig into their finances and keep them on track. The difference between somebody who is doing fractional CFO services versus accounting, bookkeeping, is that the CFO services are forward in nature. We'll be looking at things such as the cash flow and making sure that there are 13-week rolling plans in place, as well as looking out at the year's cash flow and 5-year plans, et cetera, so that way we keep the business on track towards their future goals and growth. Along with that, also making sure that profitability is being factored into what is being calculated there. We're looking at projections and budgets and business cases. Quite often, the small business owner wants to be looking at getting a loan in the future and having those projections in place, having the financials all ready to go, and having a good business case together, which I work on the full business case as well as just the numbers, is important when you're going to the banks or some of the outside financing lenders to be able to put your case in front of them and see what you can do to get that investment purchased. I also work with financial analysis and key performance indicators. Speaking just even from within my retail store, we were always interested to find out what was happening as far as average daily sales or sales per hour, how each individual salesperson was doing, and what metrics that they were meeting to make sure that they had the proper average transaction per customer. I look at pricing and profitability of products as well. Then on the bookkeeping side, that's more going towards the historical. That involves things such as the cleanup and catch up of the books. A lot of business owners put that aside. They're focusing on their business, and which is what they rightly should be doing as a whole, making sure that their customers are being taken care of. They're following their passion. And usually financials are not part of the passion of a typical small business owner. And they let the books either fall behind and then they start trying to play catch up, especially at tax season, or they feel that they didn't understand what they were doing and that their books are messy. So they need somebody to come in and analyze everything and put it all together and get it all cleaned up for them as well, which is important once again when you're looking at financing. I also work on the monthly bookkeeping. Usually the monthly bookkeeping, that's the part about getting the transactions categorized and getting the reconciliations done for the month, and then also getting all of the financial statements prepared, the profit and loss statements, the balance sheet, statement of cash flows. I am a QuickBooks Advanced Pro Advisor, so this is the platform that I normally work in. I can pick up other platforms as well, but the QuickBooks is where the majority of America, at least, is residing, and so that one is one that I have the most expertise in there. So looking at all of that all together, no, Rodney, not yet. I am going to put it out to you there about why do you think it's important whether businesses or individuals speak to a financial professional as they're going about their daily lives there. So we're going to make that the topic of the breakout room, about going out and talking to financial professionals, whether it's a financial planner, somebody such as Rodney, for instance, other financial planners that may be here, or whether you want to talk to somebody who can help you within your business, the CPAs, the people such as myself, the CFOs.
Next slide.
No, this is where we're going to the breakout room.
Okay, Lamar's got a quick question.
Oh,
What is our question for the breakout room?
I'm sorry.
What is our question for the breakout room?
Oh, why do you think it's important that individuals and small business owners are working with and speaking with financial professionals?
Okay, thank you.
I'll blast that out to the groups once we get it open. So I got the breakout rooms ready to go, guys. We're going to go for about 8 or 9 minutes. If you don't know the people in your group, feel free to introduce yourself, take a few minutes and do that, and then talk about why it's important, right, that someone should be speaking to a financial professional. We got a lot of financial people in here that have went through the field and stuff in their career. So it'll be interesting having this topic on Mark. So. Wow.
Rodney,
It's all
before
yours,
we,
Joey.
quick question about the dollar cost averaging we were speaking on. Does it make sense to buy a set amount every month, or do you set cash aside and look for certain price points to enter?
So because the hardest thing for most people is discipline, right? I think I say, hey, we're going to set up a monthly pack of $100 or 200, whatever is within the budget, right? And then, we got statistics that kind of say, hey, these are typically the best days to buy in the months, and so I can spread that $100 out like over. Hey, I'm going to put $25 in on the 12th. I'm going to put $50 in on the 22nd or whatever, and then the rest of it's all going to go in on the 28th of the month or whatever, right? And so we can do that and look at historicals and stuff like that, Ray. But better to get them doing the habit of putting the money in first, right? And then when opportunities exist like this, and I'll get you in a second, Dave. I'm sorry, I'm not supposed to be running this show.
Oh, well, we'll talk after. Sorry.
Ray,
Yeah.
just
Who
a
the
quick,
heck are you?
Ray, just a quick comment. I ran the dividend stock purchase plan for 2.5 years at a Fortune 500 company, keeping all the data. I saw more people become independently wealthy that were just factory workers by taking the $10 a paycheck into it. So you always come out ahead if you just set aside an amount and do it. It's really almost as frequently, whether it's weekly or biweekly, rather than trying to time it. It always works. The only time it wouldn't be is if you had the Great Depression, right when you wanted the money. But virtually, it's almost always better just to take that set amount and put it away on a regular basis.
Yeah. Joanne, we're gonna turn it back over to you because Dave and I could probably talk forever too.
Well, okay. There we had our breakaways. Were there any good takeaways? There, each room.
Yes, accountability. You have to be accountable for what you're doing, regardless if anyone helps you or puts a plan together. You still have to see through and follow through.
It's very true.
There's two things. One was when I worked for a small company, cash flow always seemed to be an issue. If, in the example I gave in Cincinnati, if you sold to Procter & Gamble, you had to pay your bills in 30 days, but Procter & Gamble would take 90 to pay you. And the other one is working for a private school. Basically, they would always come up with make sure that there's no fraud going on, make sure that somebody's not making their car payment, or making an extra car payment based on how they've set up the payroll. So there was none of that going on where I was at, but they were. We would always get the email from the archdiocese, make sure that there's no fraud going on.
It's true. Lamar.
Our group had two key things based on over 40 years of experience. One is cash is king. And the other was you don't know what you don't know.
Very true.
And I had an unfair advantage in the group because both Dave Scobland and Ron Levine, both of them have been business owners for over 10 years. So they have a wealth of experience on the importance of those two sayings.
Very true.
Frequently what not to do.
I think the other thing we didn't really mention it in the group, right? But is the fact that like a lot of this stuff isn't being taught. I mean, Shirley brought up, hey, we both had mothers that were bookkeepers, so they kind of had some knowledge of all of that stuff, right? But not everybody's grown up in that environment, and so we're taking on habits basically that were our parents and our grandparents and so on and so forth, right? I think it's always great to find that subject matter expert. I would not go to Ray to run a nuclear reactor, but hopefully Ray would come to me if he needed it run, right?
Makes sense. Definitely. There. Well, yes, moving forward here, what I'm going to do is cover some of the key, in this case, 4 trouble points that I commonly see when I sit down with a client. Now you may go to that next slide. There. Perfect. Okay, the first one that I see is business owners and individuals not setting and following a budget, as was mentioned just now in the takeaways. The cash flow is king, and if you're out and not following a budget and you lose track of your finances, you are going to possibly run into those cash flow issues. When you don't see it, it's and what's happening and comparing it to actual, then poor decision making. You can do a lot of overspending, buy things that really were wants rather than needs, and then miss out on being able to cover your needs when they come up. That leads to that inability to handle the emergencies. The last thing you want to do is to be out there having to turn to that battled credit card with the high interest rates in order to be doing your financing. You never know what's going to come after that, and it could get you in a whole mess of trouble. And you do need to factor in when you're preparing your budget some of those things that are one-off expenses. There's those things that are your routine monthly, but factor in that there might be some type of an insurance payment that comes up a couple of times a year, or factor in things that you don't see on a daily basis. There, for instance, in the business and in the personal, their maintenance in your house for personal, and make sure that those are built into the budgets as well. There as well as any special things like business trips and things that are going to need to be taken into account in order to make sure that you have the funds there to cover them when they do come up. We will move to the next slide. Okay.
Oh,
Nope. Yeah. Poor data collection and record keeping, very common with my clients. This is not only the individual things such as the receipts and the invoices, but it's even keeping hold of their financial statements, their tax printouts from prior years. So when you have this type of thing happening here, especially going into receipts and invoices, that can lead to compliance issues. The IRS, if something happen where a audit happens to come up for you, they don't care about what your bank statements say or what your credit card statements say. They want to see the source documents with the line items on it. And if you don't have those, it's very common for them to disallow the actual transactions to take place, which could then mean that you have some tax payments to make that shouldn't have happened had the records been there in place. It also means that if you have poor record keeping and you're not able to pull up some of those that paperwork, for instance, prior tax years, then there can be challenges in your loan applications as well there, because they need to see some of that information too. So it just makes it a little bit harder for you to get where you're going. So definitely recommend that you keep good financial records and have a system there. And we can move on.
So are we saying a stack of yellow stickies is not?
The stack of yellow stickies is going to do it for you, Rodney. There. And commingling funds. This one is more common than I ever expected to see. And that's basically where you're mixing your business and your personal. I see so many business owners who are using their personal credit cards and their personal bank accounts and paying bills out of those. They're also using their business bank accounts and business credit cards to pay their personal expenses. And so what is happening there, one of the biggest and most important is that for a business owner, they've set up an actual business entity, and that was meant to be a legal shield or protection. And when you start commingling with your personal funds, then that it does what's called piercing the veil. And therefore, if something should happen, a lawsuit of some type, they can go back in and do an analysis, discover that you've pierced that veil, and come after your personal assets. So that whole point of setting up as a business entity basically just went out the window, and you're not, the protections you thought you had are not there at that point. There, the commingling of funds, also the financial records, financial planning, then are not going to be accurate. You can have business expenses that you're not capturing, and you also can have personal expenses that are making it onto the profit and loss statement that don't belong there. So you want to be able to make sure that everything is accurate, because garbage in, garbage out. And also there's an impact on credit as well. When you're running things through your personal cards that don't belong there, or the business cards, then that can impact your credit scores and have the, basically amounts showing up in the wrong area, showing up, your debt utilization ratios improperly on the business versus personal. And so you really want to keep this area separated, and don't mix your business and your personal funds. Going to the next slide.
Hey, real quick, Joanne, and I'm sorry. So because most of this deals with business, I want everyone to understand commingling happens within individuals too. And here's how, right? How many of you guys have seen somebody go, oh, I got an emergency fund, but it's actually just their bank account that their paycheck gets put into every week, right? And they're like, well, when's the last time you took money out of your emergency fund? Oh, last week we went out to dinner and stuff, right? Well, then that's not an emergency fund. To me, it's the same mindset, right? That you're not separating what these things are used for, or the plan in which these are used for. And hopefully you don't ever have to hear of anybody going, oh yeah, I just reached into my 401k or my IRA and took a loan out, or got penalized heavily so that I could go buy that car or pay off that credit card or whatever else, right? Because again, that money was set aside for retirement, right? For your future and stuff. Just to kind of keep things separate in the lanes that they're supposed to be in can go a long way to keeping you living the life that you want to live, not anything else, right? And so I just wanted to kind of put that aside for an individual's basis. Go ahead.
That's true. Well, I was going to add to that with my clients. Ideally, I'd like to see them have separate business accounts for some of their different goals, to have a tax account, to have an operating expense account, to have an account that's for that special savings for a certain item, and really be able to keep those in their lanes, essentially. So I work ideally with a banking platform that allows you to actually break out into as many sub accounts as you want to, like that, and allocate into them. And that makes it a lot easier to keep that under control there for the client, and be able to stay on track towards their goals there. So let's see here, going to the final one here, not performing reconciliations. This happens very often. I'll go into a client's books and discover that they either have never reconciled their bank and credit card accounts, or even their accounts receivable or payable or other items in there, and that they are so far behind. What the risks are with that is that for different reasons, either through oversight, not adding things in if they were doing things manually, or it can be sometimes bank feed issues. QuickBooks isn't perfect, and bank feeds get disconnected. When they get reconnected, sometimes either transactions can get missed, sometimes they get duplicated. So by coming in ideally on a monthly basis and looking through all of the entries that are in there in the books, and doing a reconciliation against your bank statement or credit card, then that's the perfect time to capture and get that corrected inside of your books for that, because it comes back to financial statement accuracy as a whole. Also, by going in, you're not only catching things like the duplicate charges or overcharges, there is also that possibility that as you look through those transactions, then that gives you a chance chance to say, hey, what on earth is this particular expense that's showing up in here, and possibly track it down, because fraud does happen, unfortunately. And so this is one way of trying to be fiscally responsible and make sure that you can jump on getting things caught, captured, and corrected as soon as possible there. So so basically those are some of the 4 there that I consider to be the most important. And what I'm going to ask here for our breakout question is that if you're a business owner, or assume that you're one, where would you personally fall short in running a business, and what type of solutions would you try to correct it?
So the question is where do we fall short if we were running a business in these areas, and what are some possible solutions, correct?
Correct.
Awesome. So I'm going to open up the breakout rooms, guys. It's 10:44. I will see you guys back here shortly. If you don't like the people you're with, just come back. It's all yours, Joanne.
Yep, we're all back. Okay. All right. Well, then, with what was discussed in there, what are some of those common issues that you feel that you're falling short, and what would you say would be resonated the most with you?
I'll kind of speak for our group. Sometimes it's the kind of dipping in and out. Is like, should I put this money in the business, or am I having a really good year, so I should give myself a bonus, or I have this chance to the flip side of that is I have this chance to expand, but I don't have the money right now. Should I take my own money and put more in? Those would be the 2 things.
Makes sense. So there. Anybody else?
The flip of that was, does the business buy this thing, or do I buy this thing? Can I justify it as a business purchase?
Same thing said differently. Yeah.
There, that's true. So you want to make sure if you're buying it for the business, it's supposed to be used exclusively for the business, and ideally vice versa. You have to be careful about how you're expensing those things through, and where they end up, if there should be on the books or shouldn't be, like cars and other things like that. There can tend to get people in trouble. So
Home office expense.
home office expenses are another one that they try to slide some of those through, and gym memberships, you name it. Depending on business structure, it may or may not be allowed, but
The gym membership is a lot cheaper than BMI. Come on.
Did you say BMI or BNI?
Yeah, I mean, it's a networking opportunity, right? That's all it is. So,
Golf club
true.
membership could be
membership.
could be a business expense.
So I shared in the group, we said, 8 years ago when I came into this, obviously never being 1099 before, tracking expenses was something different for me, right? And Expensify very rapidly became one of my best friends, and made it real easy, right? To say, hey, I'm taking a trip from here to here, and it tracks my mileage, and where we go to breakfasts, I'm taking pictures of the receipts, and it's all right there. It consolidates all of it into Excel spreadsheets and categorize it in accordance with the tax code the way it's supposed to be, right, and stuff, which makes it nice. So
Very, very true. There. Anybody else with something, or?
We were talking about planning.
Mhm.
Some of us have to file taxes quarterly. So just the logistics of doing that and having to be on top of everything because you're constantly, filing taxes. It can be a nightmare or overwhelming if you're not prepared. So just having everything planned and thought out and for that process is a big deal.
Joanna, you mentioned a bank. You work with a bank that allows you to kind of separate some of that stuff. Do you mind sharing that bank, or
Yeah, if you are interested there, when we do our contact, you can email me and ask for that information there, the Joanna Transcendent Business Solutions, and I can send a link over to that bank. It's called Relay, and it's a virtual bank, but they have no minimum balances and no fees, and they allow you to set up to 20 individual accounts within that. And so you can get as granular as you want to get, though probably no more than 5 to 7 at the most is really what most people would need. But it does help and has the ways that you can actually do automatic allocations into your bank accounts if you have income coming in. And so it's a pretty handy tool to use, especially for planning and keeping your finances on track. So I personally bank for my business with Relay, and I've sent some people their way as well. So basically coming back over there to recap what we've covered, we talked about areas that are important to keep on top of. One of those is having a budget. You want to have that, compare it to your actuals frequently, and make sure that you're staying on track. You've had goals and dreams, so if you want to stick to them, this is one way to do it. Also, careful record keeping. Make sure that you set up a system, keep those invoices, keep those receipts, and make sure that they're there, even if they're in a shoebox, but at least keep them. And then don't commingle. Make sure that your business and your personal accounts stay separated, and that you understand the rules for doing so if you are a business owner. And reconcile, do that monthly, and make sure that you stay on top of any issues and that you get them discovered quickly and corrected quickly. There. So what I am going to say is, if you want to speak with me some more about some of this discussion here today, have me answer QuickBooks questions, or get in and answer a few more of the types of questions that we were discussing today, then I put my calendar link into the chat there, and the Calendly Joanne 30-minute, and we can have a chat and see what I can do to help you.
Awesome. Give it up for Joanne Ziolkowski, guys. Great information, right? Whether you're in business or you're just an individual out there trying to understand more about what you can do with your finances, right? Those are all great opportunities. Her business web address, right? transcendentbusinesssolutions.com. Great place to go and check it out a little bit more about what her services are that offered. I would also encourage everyone to either go to her LinkedIn profile and talk about how educational she's been for us today. Is the same way. And so we got 2 more weeks left, March 1st or March 25th and then April 1st before the anniversary pick. But next week is the spring book share. So if you've been reading a good book, or you've had a good book on your mind that you've read recently, right? Bring that next week, right? Let's talk about it. We're going to do kind of round robin shares of good books to talk about. There you go. Jeff's holding his up, right? And then we'll go into our final week of our 4th year, going into our 5th year, right? With our anniversary on the 1st of April. So go out there, have a great week, everybody. Remember, I love you guys. All right.
See you next time.
Bye, everyone.
Thank you, Rodney.
Thank you, Joe.